I mean multiples of your money. And the keyword here is systematically. I think it can be done, like going to a casino and learning poker while playing at a poker table. One of my misgivings around how syndicates operate today is that it's a little bit of a wild west, to be honest.
Jed, hello. I want to welcome you to our podcast. And actually, I really want to give you the opportunity to introduce yourself and tell us a little bit more about your experience.
Yeah, thanks for having me, Julian. I really appreciate it. So my background, formerly as a tech operator, I helped build an API marketplace that was backed by Andreessen Horowitz. I began venture investing as an angel since 2016, so I invest balance sheet capital. Out of this, at this point, I've got an exit, have backed two companies at seed stage that have turned unicorn, potentially an IPO next year. Let's see how things go. And in 2020, I started building my own syndicate. I think what I realized at the time, and it still is largely the case today, that even though the concept exists, the execution is still actually quite basic. So I had to go figure out a playbook and a methodology for doing this. And so I started doing that. And I'm 4 years in. I've grown an LP network from zero to 1,400. And we've written as large as seven-figure checks into startups. And my latest venture is AngelSchool.vc. We teach programs for angel investors. So the same way there are accelerators for startups and founders, we're an accelerator for angel investors. So we help them with the 0 to 1 of their journey, just learning the fundamentals. And for the angels that want to scale up and run their own syndicates, we have a separate program for that.
Yeah, Jed, it's very, very impressive. We already had the chance to have the webinar together, and your experience and the content for our audience was really incredible. So I know definitely that you already have plenty of things to share with other syndicates. So probably I will just for the audience also give the introduction for myself. So my name is Uliana Steibel. I'm CEO and founder of Quorum. And Quorum is a syndicate management software. We work with angel syndicates, VC funds, and their portfolio companies. So, can you explain to our listeners actually why anyone would need to consider or want to consider to invest in startups?
Yeah. So good question. I'll talk about my motivation for why I started startup investing. The very simple reason is that as a life ambition, I want to be independently wealthy. I think that venture and startup investing is one of those asset class, the only one really that I can think of where you could systematically make outsized returns, right? By that, I mean multiples of your money. And the key word here is systematically. I think it can be done. I'm not saying it's a certainty, but I think it can be done with venture versus a lot of other asset classes where, you might be earning a few percent a year. If you can imagine, think back the last 10 or 15 years, we've been living in a zero interest rate world, right? And so everybody's looking for some way to grow their wealth. And that was my motivation.
It's a good one. I know that a lot of angel investors also start to angel invest when they exit their own business and they have some free capital to support innovations or support impact projects, impact startups. So for everyone, I think it's a combination of different factors, but it's definitely what makes you contribute to the growth of the new venture and potentially actually make a significant exit.
Yeah, if I could make one point, I think there's something that I believe is at play, right? I think that the really serious founder and the really serious angel investor, it's two sides of the same persona, right? Fundamentally, we're also people that are intellectually curious. we want to give back through experience and capital at the same time, and to fuel a new generation of founders, of innovation, of companies, and to try and make an impact around the world. That for sure is a common denominator.
Absolutely. So, how would you recommend actually to anyone start angel investing? Where to start?
Yeah, I have very strong opinions about this. I liken the common experience for people learning angel investing like going to a casino and learning poker while playing at a poker table, which I've been through it. It's not the smartest way to learn when you think about it, but it's actually surprisingly common. And so a lot of people do get burnt, myself included, and it's not good for the ecosystem, right? The reality is that the venture skill set is a very difficult thing to learn and acquire. It takes lots of reps, a lot of experience. So I think one component of it is just knowledge and education and understanding what the game is, and how to try and to have an advantage at it. Another tip I commonly recommend to angel investors starting out is actually go pick a few syndicates who are really mature and are serious about what they're doing. I know it sounds biased because I have a syndicate and I'm not recommending mine, although I welcome anyone to look at my deal flow. But I think really good syndicates, they have these economies of scale and this built up knowledge of looking at a lot of companies, getting a lot of reps, and a properly structured syndicate or angel that will be writing up a proper thesis for every single company. Meanwhile, there is no fixed cost, there is no commitment for you to look at the deal flow to see the diligence. So for an angel investor, it's in a way free learnings, right? You can see how somebody else who's more experienced does it. It's a better way than doing it yourself. It's something that isn't available through by investing in a VC fund, right? Even if you could afford it, which most people can't, the VC fund will not be sharing deal level diligence with their investors.
Yeah, it's so true. I heard many stories from angel investors who started to invest on their own in directly into startups, and usually what they end up with very bad decisions, specifically on the beginning of their investing journey, like learning from their own mistakes. And that's why at Quorum and me personally, I'm strong believer that the best way for anyone to start angel investing is actually go and find a good syndicate. And indeed, like just look to the deal flow because it's usually free to join and just follow what the professionals are doing and join into syndicate. And there are plenty of the reasons where actually the syndicated investments more efficient than doing your one by one investment. The diligence, control, consolidation of the your control power in the startup, but also usually the diversification of the portfolio, because we also see that this syndicates, they even though many of them would have some kind of the thesis, they still would have quite diversified portfolio. Is it we seen different industries or like still the kind of diversification that comes when you invest with a syndicate on a continuous basis. So,
Yeah.
how would you recommend actually to select the angel syndicate? What to look into? Like, what kind of the metrics as parameters? Where to look for them?
I think as a practical matter, well, firstly, we've talked about this before in our past conversations, right, Juliana? I think that when you're evaluating at a syndicate as a source of deal flow and also learning, like we just discussed, the starting point is to understand your own investment thesis and parameters, and to follow the syndicates that actually have some alignment, right? There's no point otherwise following the deal flow. The second bar for me is, does the work they do meet some standard that meets my expectations? And the simple thing to do is go ask for their diligence on a recent deal, right? And to see the kind of work that they put together. One of my misgivings around how syndicates operate today is that it's a little bit of a wild west, to be honest. There are some groups that literally do just about anything, nothing except passing along a pitch deck and then asking investors for commitments. And it's like, you can't reasonably charge carried interest for this, right? Just for throwing deals out there and seeing what sticks and then complaining when people are disengaged. It doesn't make sense. So the standards to me matter. I think as an industry or as an ecosystem player, this class needs to get better. So yeah, it's the combination of these things, right? One is understand your thesis. Second, pick the syndicates that meet your standards. And I think the third element that's really important is you're not tied to any single syndicate, right? There is no exclusivity. I wouldn't expect the members of my syndicate to be exclusive to me. It just doesn't work like that. So shop around, work with different groups, and in the end, go through the process of constructing and building your own portfolio. Because I think that's part of the skill building as well, right? For the individual angel, you're building on top of the work that's done by others, but also be an active participant in this process by making conscious decisions for yourself, right? And actually reading through the diligence and to decide, hey, okay, does this align with how I see the world?
Totally agree with you. So, one point which stick with me a lot, I think it's definitely that good syndicates they do much actually of work on a preparation stage because they prepare the investment memo, and investment memo already includes quite a lot of information that been researched by the syndicate lead about the company, why company supposed to be successful, what are the growth expectations, right? And I would definitely go for the syndicate who actually provide the memos rather than one, as you said, like just throw pitch decks and see which one is gonna stick to the audience because it's not gonna work this way. The role of the syndicate lead is quite important in the diligence, in pre-selection, preparation. And another one, I would probably also go for asking, of course, about the exits, but also about the growth in the valuations, but basically how the companies got that the syndicate already had invested, how they grown in their value. Even if the exit is not happening soon, so it still means that there is some kind of this indicators about the valuation growth, kind of assets under management, right? Value of the assets under management that can be a good indicator if the syndicate is making good decisions about the startups. And also, probably worth mentioning that there is always the opportunity to choose, as you said, like the thesis. But I would say this is really what define different angel investors. Some are more conservative, some are more risk takers, right? And there is a balance, of course, between the risk and gain. But syndicates, probably most of them are definitely for the early stage startups, but there are the syndicates who invest also on the later stages, right? And it's something to consider when you're entering this space and want to select the syndicate which is aligned with your goals. So it not necessarily have to be the super early stage syndicate. It could be also some more growing.
For sure. I agree. I think the other way to think about the syndicate vehicle for an angel investor is think about being part of different syndicates as a way to extend your stage access. Because if you're an angel investor, you're writing a 5, 10, 20K check, you basically in play up to pre-seed or seed stage. But a syndicate that's immediately able to aggregate, let's say $100,000 plus check, you're immediately able to play seed, maybe Series A, and the continuum can span up to like Series B, or there are syndicates that do pre-IPO secondary deals as well. All right, as long as you can hit their minimum check, whatever that number is, you can access those deals, right? So it expands the playing field for the angel, right? It shouldn't be that I write this check, therefore I can only play in like the super early pre-seed where there's only a pitch deck, for example.
Yeah, and definitely. And Jed, what do you think? Why and when it's actually the time to consider to launch your own syndicate? Like how it happens that someone become the syndicate lead?
Yeah. I think that the people that do think about building a syndicate, right? There's three groups of personas, honestly. One is, I think the people who want to like kind of get rich quick and say, I can bring together money and just scale up capital and do deals. And usually that it tends to suggest like the motivations are wrong, right? It's like they tend not to like stick with this game because like running a syndicate, I call it like running a bootstrap startup. It's, sometimes pretty difficult. I think the second group of people that do it tend to be more experienced angels, have done a few years, of angel investing. They know their own thesis, what they want to invest in. They've built the deal flow, maybe shown a little bit of track record, right? Some data points of success. And now they want to keep doing this, but they hit this capital barrier. Like they can't just be deploying their own capital and not get liquidity to be able to cash out into the deal. So the depletion of personal risk capital basically becomes a forcing function to think about getting to the next level, right? I think those people are the most positioned for success because they'll go, I like this enough and I'm serious enough about it that I want to scale up. The third persona actually is the emerging fund manager. One of the common arguments against the syndicate vehicle, and I think it is fair, by the way, that people say, you know what, I don't want to do a syndicate because there is no predictability on the capital, right? It's not like a fund where you raise a fund, you have dry powder, you know how much you can deploy. With a syndicate, every time you have a deal, you could argue that you're almost always in constant fundraising mode. And I understand that it can be tiring. But by the same token, I could argue that building and starting a fund for the first time is not exactly, going for a walk either. It's really, really hard. So I think there are cases where aspiring fund managers will say, hey, you know what? I will start with a syndicate to build the track record. Or it could be the other way where they try to go out into a fund and just got hit a brick wall and said, okay, fine, I need to revisit how I go to market. And then they come back to the syndicate.
Yeah, I totally agree. Actually, about the point about really launching a fund and how complicated it is to manage the syndicate and deal by deal investments. To be frank, I believe if it's actually the good syndicate management software and service providers that you work with, right? So it's a lot of the functions are actually covered. And yes, your job is always to manage the outreach and keep the community engaged, right? And about which you talk a lot on your course and on the webinars. But all of this, it's actually probably not less that the management of the compliance that you would do on a monthly basis with a regulated fund, right? Because we still are in an environment when the syndicates are mostly not regulated, right? Or covered by the service provider license, while the fund is regulated. And it means that that actually it's much more compliance on a monthly basis that you need to follow if you regulated fund. So what do you think is actually the motivation for someone to launch a fund, the VC fund, versus launching the syndicate? And have you ever analyzed, really, for example, for you to transform into fund, would you go this way?
Yeah. I mean, I have thought about it, right? It's just a very pragmatic, rational exercise. The way I think about the syndicate vehicle and the fund vehicle is that, but they each have their own advantages and disadvantages. It's not categorically true that like one is just better than the other outright. The way venture markets are, for good or bad, I think that venture romanticizes VC a little too much. Okay, so just as a case in point, if I was standing in front of, a room of founders next to a VC and they introduce me as a syndicate lead and this other person is a GP, it doesn't matter that he might have raised a $10 million microfund, which basically means that they're cutting 100 or $200,000 checks. Whereas I've got my own investor network and we've written as large as $1 million checks. The perception will be that, or the result will be that the founders will end up taking way more interest in him versus the syndicate, right? And I'm not saying that with a chip on my shoulder or I'm upset. I think it's unfair or anything. I'm just making a point that there's this glorification of like being a VC. And I think a lot of people honestly go into VC startup fund for the wrong reasons. Anybody who's operating a subscale fund, which by my measure means anything less than $20 million with a solo GP or $30 million for at least two GPs, if you're operating less than that scale, you are subscale, which means that minus your admin costs, minus sustaining all of your OpEx, you're basically at a disadvantage compared to a syndicate. So it doesn't make sense. On a personal level, okay, I get this question a lot of times. Why don't you start a fund? There's a few reasons. One is, it's a bit nuanced. One is personal, right? There could be a situation in 3 years or something, or 5 years, I could be in a position where I could walk away if I wanted, right? That I don't need to be tied down. Whereas taking on a fund is a 10 or 12-year commitment, right? Now I take my commitment seriously. If I say I'm going to do something, I'm going to stick through it. And so the time horizon does matter to me. I think that what would motivate me to start a fund is really actually not the capital to say I started a fund or I'm a GP. I actually would be doing it to prove a very specific innovation in venture, which is the idea, Uliana, that if you had a large scale syndicate vehicle, which we do and we've built and we're very, very good at, and arguably this is the harder piece of the puzzle to solve, and you build a fund on top, a well-capitalized fund, and this is something I wouldn't do for anything less than, I don't know, 100 million AUM. If you had both of those vehicles in parallel, you actually unlock alpha because it opens up investment strategies that are only possible because you have both lanes of capital. All right. And that as an intellectual exercise would be more interesting to me. That would be something worth pursuing.
I found this actually probably the best approach. That's probably the reason why a lot of the venture funds also launching their own syndicates right along the fund. But it makes a lot of sense because when you're raising a fund, so you still would be mostly targeting on very high net worth individuals or institutional LPs, right? So the check probably is minimum 250K.
At least.
At least,
Yeah.
yeah. And with a syndicate, we're talking about actually kind of the democratizing the investing, right? Allowing much smaller investors to join. So the type of investors who will join you in a fund and the investors who will join you in a syndicate, it's probably even very different type of investors.
100%. I couldn't agree more. And actually, I'm very surprised that this isn't more commonly understood because it happens fairly frequently that I get approached by GPs who are fundraising and they'll say, would you share my fund with your network? And point number one is it's a little like, how dare you? Like, it feels like a very weird asset. We don't know each other. And to say like, I would like capitalize your fund for you for what? A couple of percent, referral fee. I'm depleting my own capital for your fund, right? It doesn't make any sense. And second, and more worrying, is that you have a fundamental misunderstanding between the persona who invests in a syndicate versus a fund. And that makes me worried.
Yeah, exactly. There are actually a lot of problems also about this regulation because from the regulatory perspective, when the syndicate is co-investing together, right? So it's a one type of the regulation. Some exemptions apply, and when you, as a fund, trying to raise from kind of small investors, they might be accredited, but they're still retail investors. So Actually, most of the funds cannot do it, right? They would need the separate license for raising from retail investors. And yeah, I definitely agree with you. There are some misconceptions, and probably it's where like emerging fund managers making those kind of the mistakes. But for angel investors, it's definitely much more of the flexibility when investing in a syndicate, right? Because you have a little bit more control what kind of the assets you select. One last piece of the advice that you would give to the angel investors there who are listening to us and who are willing to make their first step.
I would say if you're an angel investor or an aspiring angel investor, you're considering taking your first steps into venture, take your time. Right? Take your time to learn. There are programs out there. I teach one at AngelSchool.vc. There are other programs out there and lots of resources on the internet, many of them for free. Take advantage of the syndicates like we talked about. Look at their diligence as a learning experience. I think with angel investors, calibrate your lens of risk. Because one of the things that's commonly said in venture is parallel. You need to invest in a lot of companies. You need to diversify in order to be successful at this game. I actually disagree with that because power law is the VC perspective. It also happens to be aligned with the VC business model. Nothing wrong with that. This is just why it exists. However, with angel investors, you need to calibrate and be a bit more conservative because you don't have leverage like a VC fund, right? Average VC fund paid up capital for the GPs is 1 or 2%, which means that they lever up by 50 to 99 times on investor capital. As an angel, you have 100% exposure, 100% risk of loss if whatever companies you invest in don't work out. So be more conservative and be more selective when you're starting out. So that's my advice.
Yeah. Thank you, Jed. It's really was fantastic to have you on this podcast. Thanks for sharing your experience. I look forward to have more webinars together and support more of the syndicate managers or syndicate leads who are considering to launch the syndicate. So really great to have you with us.
Have a Juliana. I appreciate it.